Happy St. Patrick's Day, everybody. This is your market update for Friday, March 17th, and we'll go ahead and get right to it. Lots going on in the market today. Stock market yesterday having a decent day on the back of some news of a rescue plan for First Republic Bank that primarily consisted of about $30 billion from major financial institutions like Wells Fargo, Chase, Citi, Bank of America, where they basically were going to take their own money and put it on deposit at First Republic Bank. So stocks rallied yesterday afternoon on the news. Unfortunately, the concern for the U.S. banking sector right now I think is just too significant, and stocks selling off on the day. This morning, the Dow opened down just over 100 points. NASDAQ and S&P 500 opened down slightly as well. Unfortunately, that sell-off has continued throughout the afternoon. Currently, the Dow is down about 400 points. NASDAQ down 87, S&P down 44. Of course, as I've talked about before, sometimes when you have investments flowing out of the stock market, they flow into safe haven investments like the bond market, and that benefits mortgage-backed securities, which is exactly what's happening today. Mortgage-backed securities started off the day up 11 basis points. Last I looked a few moments ago was up 42 basis points. So we already had a slight week-over-week improvement in interest rates based on the Freddie Mac survey from yesterday, and I'm banking on the fact that we're probably getting another 1/8% improvement in interest rates today on top of what the improvement week over week showed. Maybe not quite that much, but nonetheless headed in the right direction. Next week is going to be full of a lot of information that's going to impact the markets. That would consist of existing home sales on Tuesday, the Fed statement and press release at the culmination of their meeting. That happens on Wednesday. Then on Thursday, you've got initial jobless claims, which is, again, unemployment claims filed for the first time. The big hitter is going to be the Fed statement and press conference because everybody, especially taking into account what's going on in the bank sector, is going to be looking at them very strongly to see what their stance is going to be moving forward. We also had some favorable inflation numbers happen or come out this past week as well. So lots pointing to reasons why the Fed shouldn't be that aggressive moving forward. Some people even think that they won't hike rates at all. I think the overall consensus, the majority of people think that they're going to hike by 25 basis points, which, we'll see. But I hope that you guys have a great St. Paddy's Day. Have a great weekend, and I will see you on Monday.